Okay guys, welcome back to another market open forecast video with me, Jack. Some of you know me already from our daily Forex calls, but those who don't know me, I'm from the high tide trading community. We're a community of people trying to learn the Forex markets and investing our money into the stock market too. So if you don't know about us, then check the links in the description. In this video, we're going to be doing a top-down analysis where we review GJ. So I do want to mention the disclaimer before we start. Like I said, we are just a community of Forex traders or beginners, just trying to learn how to trade the Forex markets together really, and nothing we sort of do or say should be taken as financial advice. Starting with the monthly time frame then, I'll be drawing a trend line. I did this last week as well, of this descending structure, and I just want to highlight once more how we've actually broken that descending structure. Back in January and February we broke that descending structure, and that kind of lined up with a break of this resistance of the 142 level, roughly 142, 143, that general region there. We've broken that resistance. Now what we tried to do since pushing up with the January, the February and the March candle, we've tried to create a resistance now. And that resistance roughly lines up with this region that we saw back in 2016 with all the Brexit stuff. We saw an attempt of a support here at this 155 region. So what we're seeing now is an attempt of resistance. We saw that with the April candle, but as we can see, the May candle has now pushed through that, said no, we're not going to create a resistance here, broken the high now of the April candle, indicating that, you know, plenty of liquidity has come in on the higher time frame for new buyers to step in, bring the pound even higher and give 156 a go. So that's kind of the level that I'm keeping my eye on this week and for the rest of the month, is 156. Can we break that level? Dropping down to the weekly then, what I'm going to do is select this horizontal ray tool, and I'm going to just select all the market levels where I'm seeing reactions in the past. Remembering this is the weekly time frame, so I'm just going to get, you know, a bit carried away here, draw as many as I like. Gonna just adjust that one. I can put another one here, even though these are very close. You know, I can really just sort of get carried away. Even draw some down here. I'll probably end up deleting those now. Okay, so these are all the levels I'm seeing where there's market reactions, and now I can translate these levels into sort of pretty horizontal rectangle boxes. So we've got one there, and then I can delete those. We've also got sort of one up here, and I'm seeing one up there, sort of lines up with, you know, 156, 157, that kind of stuff. And then down here as well, but I'm not going to bother doing this one because, you know, we're far away from that. It's very unlikely we're going to be back down there with the week ahead. So now I'm just going to delete these lines so I know they're accurate. I can zoom in here, there, then adjust these zones slightly just so they all line up nicely. And then I have to try and, you know, make a story out of what's going on here. So, you know, since we broke that trend that we've spoken about on the monthly, we've just continued up very consistently. This is quite kind of all new year momentum, new year price action, very easy time to trade, just finding places to buy. But it's not that simple anymore. So what we've done is create a small resistance here at 153, pulled back, some liquidity came into the market. We then got that bearish monthly candle in April. Since then we've broken that high like we said on the monthly, and now we've performed a bit of a breakout on the weekly time frame. So if this was the 30-minute time frame or the 1 hour time frame, this is about the point where we'd be looking for buys. You know, we've broken that level. So probably now we'd wait for a retest and then some kind of continuation above 155 to then head into 156, and like I said, just working off the integers. Right, so those exact same zones that we've just drawn on the weekly, they're completely unchanged. I've dropped down to the daily time frame, and what I'm seeing is a bit of a channel. So this is very similar to last week again. I'm just going to draw this channel. There's the top, there's the bottom. The bottom's not so clean. You know, I could change this, I could tweak this, but ultimately it's just to show me that we're making higher highs and higher lows. I'm happy with that for now. And the reason I highlight this is because if we do fail to create a support in this region here, which once again we've just drawn on the daily, on the weekly, and gone down to the daily with. If we do fail to create a support there, then I'm anticipating a break below 153 and potentially, a return to these levels here at 152 or maybe even 151. Whereas if we break this resistance, then it's probably going to be a trip to 156. So we're going to talk about these daily candles now as we drop down to the 4 hour. I'm here on the 4 hour, and what I'm going to do is delete these zones now. So this one is pretty far away, so I'm gonna get rid of that one. All this one's doing is showing me where 156 is, so I can just keep that in mind. With this one, I'm not going to delete it, I'm just going to adjust it. So I'm going to bring this in. Remember, this was drawn on the weekly and adjusting now on the 4 hour. Can bring these levels in, make that a bit more narrow, and this is where we see a new key level in the market. So this lines up with 153,500, as you can see. It also lines up with a Fibonacci level, which we can see if I draw the fib from that low to this high. So lining up very well with a Fibonacci level, the 236. I can take that fib away now. What else can I do here? I can draw a trend line from that exact same low. Seeing a lovely second touch there. Haven't got a third touch yet, but we'll see if that lines up as the new week starts. We'll see if we can get a touch of that trend line, a touch of that key level, and a touch of that Fibonacci, in which case creating a support here would be some sort of great opportunity for a buy, whereas a break below this level would indicate, like I said on the daily, a correction of this big daily candle, which here is 3 or 4 4-hour candles, back down to this zone at 152 or 151. A break, however, above this new resistance just below 155 is going to indicate a very, very good potential for GJ to continue up to 156 and working off those integers once again. So that would be with the trend, that would be with the momentum, and hopefully that can happen in the new week. Last but not least is the 1 hour time frame. So we've got our strong support here from the 4 hour time frame. It's looking a little bit messy here on the 1 hour. So I've just drawn this off the original support levels there, but you can draw this anywhere you like. Maybe it would be smarter just to have a bigger box. But as long as I know that lines up roughly with 153,400, 153,500, that kind of area, I'm okay with that heading into the new week with that number in mind. I can clone that and bring one up just to show me where that resistance is, but I already know that's kind of 155. So got these numbers in mind now, these key levels in the market. What I can do now is zoom in on the 1 hour price action and try and find what's going on here. So as we know, or anyone who trades GJ knows, last week was tough. The whole of May, in my opinion, has been tough so far, and this is kind of why. No clear trend, no clear range. It's just all a bit messy. We have got this strong support, which we determined on the 4 hour, and we have got this strong resistance as well, but it's still been incredibly difficult to execute trades here. Big impulsive moves coming at quite random times. Reactions, correlations, all this kind of tricky stuff is definitely happening in the pound right now. But just looking at last week's price action alone, the last couple of days of last week, we are starting to see some higher lows now. So even though the trend line isn't too pretty, we're definitely getting those higher lows. Pair that with some higher highs, and we are getting a bit of a bias here. Once again, we've got that strong support down at 153,400 to keep us from going too low down, and it's looking like the pound should be able to continue in its ways here, continue all the way up, hopefully to 155. Give that level another go after some of this liquidity, some of this range in motion, and hopefully we'll head for 156. In relation to fundamentals, we're seeing some positive news come in for both the pound and the UK in general. COVID related, of course, Pfizer and AstraZeneca jabs have been proven now to be effective against the Indian variant. So this is definitely positive news. This was one of the main concerns in the UK and the rest of Europe, really, these Indian variants coming in. And we've got some good numbers. I won't go into the details here, but yeah, long story short, proven to be effective against the variant once you've got both doses, that is, and we can expect to see some sort of reaction in the FX markets to this news. So there's not too many numbers coming out this week. We've got Governor Bailey speaking on the Monday. He's not speaking until 3:30 p.m, so I'm expecting quite a quiet London session on Monday morning. Tuesday, we've got some public sector net borrowing numbers. These are quite important, so I'll be tentative to those, followed by CBI then as we head into sort of pre-New York. Wednesday's clean for the pound. Thursday, we've got some HPI numbers. I'll be tentative to those. Not expecting it to have too much of an impact on the FX market, to be honest, but we'll see anyway. And then Friday's also clean for the pound, so nothing too severe this week. So it's not such a simple summary this week. We've got a bullish trend on the monthly, still got a bullish trend on the weekly. That monthly candle is pushing through the bearish candle we had last month in April, so that is a good sign. The daily is still trending upwards as well, but we've got a bearish weekly candle, a bit of an indecision candle on the weekly. We've got a bearish daily candle, and then the lower time frames of 1 hour and the 4 hour, they are ranging as we saw. So overall, it will be a bullish bias still on the pound just because of the fundamentals and the overall technicals on the higher time frame, but ultimately it is a weak bias, and we know that we're stuck in a range. So we're open to buys and sells this week, but we're very aware that the higher time frames are still bullish.